Welcome, everybody, to the Metro Startup Launcher webinar on micro investing and also on the Kentucky Angel Investment Tax Credits. I'm Alan Grossheider. I'm the director of Metro Startup Launcher and the CEO of a company called Blue 222. And also on the webinar today is Sandra Marlowe. She's the CEO of a company called Bakwa. Hey, Sandra.
Hello, Alan. Thank you. I'm looking forward to the opportunity to have this presentation with you.
Thanks. So we'll try to keep it pretty short, try to keep this thing to 30 minutes. The agenda we're going to go over today would be the mission. We're going to talk a little bit about the mission for Metro Startup Launcher so that everybody understands why we're doing this. Then we're going to talk about how you can use the Kentucky Angel Investment Tax Credits if you are a resident of Kentucky, and some of it's actually transferable if you're outside of Kentucky, and then give a quick overview of Blue 222 and Bakwa. Both companies are qualified for the Kentucky Angel Investment Tax Credit. We'll do a quick disclaimer. All of the information we're going to share today, we're not lawyers, we're not an investment advisor or broker, and we don't provide any kind of legal advice, and Metro Startup Launcher doesn't endorse companies right now. We are a 501c3 nonprofit organization and are just working to encourage local investment in startups. So any investment you make would be between you and the companies. And we're also going to provide a disclaimer for each of the companies that the information provided on this webinar, you really need to deal directly with the companies to rely on any information. This information is just for a quick overview of these companies, and you can get more in depth directly with the CEO of each company. So what are we trying to accomplish with Metro Startup Launcher? Some of you have been to our meetings and heard what we talk about, and what I'm going to talk about here, but the main thing is more startups produce more jobs, and it produces more wealth. There is a Kauffman Foundation study that shows that since 1977, startups have produced an average of 3 million new jobs per year in the United States, and mature existing companies have produced net zero new jobs. And are we talking about huge venture-funded companies like Google or Facebook? Well, it's partially. But 60% of the Inc. 500 companies were started with $10,000. So the point is, starting companies with small investments produces wealth, and it produces jobs. So that's great. Why don't we just start more companies? And that's where the problem comes in. We're not Silicon Valley. So what's in Silicon Valley? There's lots of money, there's lots of ideas, lots of startups, and lots of failures, and a few really big hits. And people are okay with investing in multiple failures and making it up with a few huge wins. What we do have in our area is a very strong startup community. We have, for Louisville, for the size of the city, and Kentucky also, Lexington has a very strong startup community. We have the Enterprise Corp, we have Vogue Awards, Venture Connectors, Open Coffee, Lean Coffee. We're one of the first cities with Endeavor, which is an international organization that accelerates startups. So we've got a lot going on for startups, to help startups in our community. And there's no shortage of people that want to help startups. And we've got some great startups too, but we don't have enough angel investors. What's an angel investor? It's somebody who invests early in a startup. So we do have some angel investors, but we don't have enough to really accelerate the startups. And generally people think that only really wealthy people can invest in startups. And typically lawyers will encourage startups to take minimum investments of $25,000 to $50,000. And that really limits who can invest in a startup. And why is that a problem? Well, I'll give you an example. There's a company called Rubicon Global that started in Louisville. It's a software as a service company that helps it's almost like Uber for waste management. They use small mom and pop waste management companies all over the country to efficiently manage waste hauling for companies. They started out of Louisville. They got investments from a number of local wealthy people, and then they ran out of local investors who could afford their high minimum investments, and they found an investor in Atlanta. I guess where the company is now, it's in Atlanta. And they since then they have raised $196 million, and their last valuation was $1 billion. So there's an example of why it's important for us to figure out how to get more money to these startups. This startup could still be in Louisville if we were able to raise more money. How do we fix this problem? We spread the risk with crowdfunding. Crowdfunding like Kickstarter has been around for a while, but it's donations only. And the laws changed last year, May of 2016, to allow equity crowdfunding that allows anyone to invest in a startup, equity invest in a startup. That means that a startup can sell shares to lots of smaller investors. Why does that make a difference? Because the Louisville area has 1.3 million people. I think there's something like 5 million people in Kentucky. We also should have quite a few accredited investors in the Louisville area, but now that anybody can invest in a startup, we can look at that 1.3 million people, all of those 1.3 million people, as potential investors in startups. There are two types of crowdfunding that we're going to focus on with Metro Startup Launcher, typically. One is Regulation D 506C, and one is Regulation CF. The 506C crowdfunding became legal in 2013, and it allows a startup to raise capital from anyone and to publicly advertise that they were raising capital. This makes it a little easier, I think, to raise capital, to advertise a little more. It's very liberal in how you can advertise your capital raise. Regulation CF crowdfunding allows, Regulation 506C only allows accredited investors to invest. That means someone who makes over $200,000 a year, someone who has $1 million net worth, and you have to be an accredited investor to invest in a 506C company. And then Regulation CF crowdfunding allows anyone to invest in a startup as long as that startup raises the capital through an investment portfolio or investment portal. And I'll talk about the portal that we're going to be using. The Regulation CF crowdfunding is a little bit more limited in how you can advertise, but it does allow any investor to invest. Eventually, we'll be using WeFunder, most likely, to list startup companies. And again, it allows anybody to invest in a startup, even non-accredited investors, but you have to build audience first. So Metro Startup Launcher is working. That's what we're doing, is building the audience of potential investors in the Louisville area. Metro Startup Launcher is a nonprofit 501c3 corporation, and we are simply just trying to build audience and get more people investing in startups. We currently have 2 companies that are listed with a 506c raise. And as I mentioned, the reason we went with 506c raises right now, it only allows accredited investors to invest, but we're able to advertise much more liberally. Companies can talk about anything they're doing and can give forward-thinking statements about the company and really pump up what these companies are doing, where there are some restrictions that don't let you do that with the Regulation CF crowdfund. So our thoughts are, initially, we will be building audience. Probably 90% of the audience will be national for investments in these companies, and maybe 10% local. Now, long term, we want that number to go up. Maybe we could get it to where 25% of the investors come from local investors, but we have to start somewhere, and this is where we are, I think, of showing people around the country the great companies that are happening in our area. So again, it's much easier to target nationally and get people to invest in our startups while at the same time building our local investor audience. Now, eventually, we will have multiple companies that are listed on Metro Startup Launcher so that people can go in and pick whatever company they want and invest as little as $100 in those companies, that's the way Regulation CF crowdfunding is set up. You can invest as little as $100, and if you set up the company right, all the investments go into kind of one pool. So how are we going to pick these companies? That's where our local startup community comes in. We are going to work with our local startup community to pick companies that have already been vetted and that we feel have a real chance of being successful. So there's already lots of contests like the Vogue Awards and things going on in our area that vet companies and get them teed up and ready for us to really accelerate their capital raise. So why would anybody want to invest in a startup company? Isn't it like it's like investing in a horse race or in a horse or something, right? Because only really rich people do it, and they're probably going to lose all their money. Well, that's wrong, because wealthy people do invest in startups because they make lots of money. And here's the evidence. There's a study that you can Google by a guy named Dr. Robert Wiltbank and the Kauffman Foundation. The Kauffman Foundation studies entrepreneurism. And they have done 2 different studies that show that angel investors can make up to an average of 27% annual return. One of the studies showed a 27% annual return across the board in 10 years of angel investing. That's 3 times the S&P 500 average. So it's a huge return, and that includes their losses. So that's why wealthier people invest in startups, because when you get those 1 or 2 big wins, it really provides you with some significant returns. Now, some of the important findings in those studies are that if you invest in one startup, your chances of making money are pretty slim, usually a 0 return. If you invest in 6 startups, you begin to move into the break-even range. And when you invest in 10 or more startups, you get into that 27% annual return range. And people who invest in 50 or more startups actually have the highest returns. And that's because 90% of returns come from 10% of investments. So 1 out of 10 investments produces all the returns. So investing the old way would make that really difficult. If you had to invest a minimum of $25,000 in a startup, but with crowdfunding, if you're investing $100 or $1,000 in a startup, there's a lot of people around here who can invest $1,000 in 10 startups, maybe 10 startups a year. So that's what we're shooting for with Metro Startup Launcher, would be to tee up the best startups, set up the mechanism so people can invest fairly small amounts and get lots of investors to help those startups actually be successful. And to give you an idea of why maybe those 1 in 10 investments would be a big hit, just to show you an example, Airbnb, everybody's heard of them. They initially were selling their company for 10% of the company for $150,000. If you had invested in that early round, the company's now worth $31 billion. That's a 22,000 times return on your investment. So if that was your 1 out of 10, it would be well worth it, right? So what is our goal with Metro Startup Launcher? Again, just building audience, getting more people investing in startups, and getting startups listed with the right mechanisms to allow people to invest smaller amounts. So make sure that you are subscribed to the mailing list for Metro Startup Launcher. If you're not, go to metrostartuplauncher.com and you'll see a subscribe button down there at the bottom right. Pretty easy. And make sure to tell your friends, because what's important for our whole community is that we get more people investing in startups. Again, we're starting with 2 startups, trying to build a huge audience of investors that will invest a little bit or a lot if they want to in each of these startups, and tell more people, get more people investing, and then we'll begin to do some more capital raising with the Regulation CF crowdfunding and allow non-accredited investors to get involved. More startups produces more jobs, produces more wealth. Just remember, this is what's so important for our community, is that new jobs don't come from existing companies. They come from startups, and we need a lot more of them. So contact me anytime you like, and remember to tell others to sign up, and appreciate you being a part of this webinar.